Hey everybody, welcome back to another live this Sunday. As always, before we start to talk about real estate, I just want to make sure I am live. So if you catch this video on the replay, you will be able to watch it as so. So let me just check in real quick just to make sure we are live and that you guys can hear me. You will be able to watch. All right, so we are live, and this will be on the replay. If you are a part of the replay gang that goes back and checks out the lives and joins in the conversation, remember, if you're new to the channel, don't forget to subscribe to the channel. Also, if you like what you hear, or if you have questions in regards to what we're talking about and you weren't able to be with us live during this discussion, don't be shy, comment below. Also, if you're over here, definitely hit the like button. And also, if you're watching it on the replay, if you see a star kind of shooting towards the sky per se, it is called the hype button. So if you would so kindly hype the video outside of liking the video on the replay, I would truly appreciate it. And as always, like I mentioned earlier, don't forget to subscribe to the channel, become a member over here, and join in conversation with us. All right, so, and this is my dad. Hey dad, how you doing? And so we're just going to jump right into it, and we're not going to prolong it tonight. We're going to have a conversation, as you guys know, about understanding real estate and avoiding these type of real estate agents that you come in contact, or any real estate professionals that you find as you're going through your journey, whether you're trying to buy a house, trying to sell a house. You need to know the ins and outs of real estate, especially nowadays, because it has become very unaffordable for a lot of us in America and also around the world. It has become very unaffordable. And so we'll just jump into the basics real quick. So we're going to talk about, if you are currently in the real estate market and you want to kind of see what's going on, or if you've been looking around trying to figure out everything. As of right now, I know people are telling you guys about interest rates or mortgage rates, we should be more defined in it. Mortgage rates. So this is, again, with these mortgage rates are from Mortgage News Daily right here. And these are the rates. We have a 30-year conventional fixed at 6.04, 15-year conventional fixed at 5.61, a jumbo loan 6.27, 30-year fixed, an ARM at 5.37, a conventional FHA, at 5.62, and a VA at 5.64. Remember that these are national rates, so they're like the average rate across the board when they combine everything. So you could get a rate around here, you could get a rate less, or you can get a rate more. It all depends on where you're at personally when it comes to the different layers that makes up that mortgage rate for you, from the debt to income ratio to the credit scores, to all those different factors. So remember, this does not mean you're going to get this rate, but this is saying where those rates are hovering nationally. Okay, so definitely talk to your local lender to understand more about where that rate could possibly be at for yourself. If you guys don't know, again, a quick lesson around how these rates kind of move. They move in tandem with the 10-year Treasury bond, and as they call them, MBSs right here, mortgage-backed securities. These are quote-unquote bonds that go into the 10-year Treasury, and investors buy them. So Freddie Mac, Fannie Mae, they are on the secondary market. They package up, they buy loans from the lenders who originate these loans, and in turn, when they buy them on the secondary market, they bundle some of them up and they sell them to investors as mortgage-backed securities. And if you want more information around that, you can also reach out to your financier, your lender, your banker, to understand how they go about doing it. All right. So that is a quick update in regards to the mortgage rates. And also, there was something else that came in regards to these bonds. So let's read this real quick so you can get a more understanding of the bonds real quick. And then we're just going to have a general conversation. Don't be scared to kind of jump in the comments, have this conversation with me. I love talking real estate with you guys. Hey, Miss H, how you doing? Clark, I won't stay not feeling well. Just wanted to let you know I'm still supporting you. I appreciate you supporting, and I hope you feel better. Get some rest. Don't worry about us over here, but we definitely appreciate you tuning in and jumping into the live chat. You're always appreciated. And if I haven't said this yet, belated happy Valentine's Day to everybody who celebrates it. I know it was yesterday, and we're heading into this Sunday today, but hopefully you guys had a wonderful holiday if you celebrate that Valentine's Day. All right. But you guys are truly appreciated over here when you jump in the conversation. So the bonds right here says bonds close out epic week of resilience with friendly data. And so they're kind of saying it's because the way the job market, the numbers came in with the job market. It says Friday was a logically friendly day thanks to slightly lower CPI, but no matter what happened on any of the other 4 days, this week was all about bonds ending up at a much stronger levels in spite of a jobs report that should have sent rates higher on Wednesday. Says ironclad justification remains impossible, but the leading theory involves heavy liquidation mode and stock commodities on Thursday. And then it's talking about the holiday week and positioning could also be a factor. As such, we'll learn a lot more next Tuesday, especially if stocks find a reasonable reason to stage a big bounce. All right, so they are really, so according to Mortgage Daily News, written by Matthew Graham, he's saying that they are very surprised that the rates actually did not go, that the rates didn't go up. They actually saw a softening in some of these mortgage rates because of the CPI and the different things that are coming out as far as these reports. They were predicting that it could possibly create a slight uptick when it came to the mortgage rates, but instead they kind of dipped a little bit, and not too much, but they dipped. All right, so now let's head over to, we're going to get a little history about real estate. The whole thing is for, like I said, this live is more to understand real estate. I wanted to kind of do this live and not really dive just into what's happening currently in the market, but to give people a more fully understanding of real estate. Allow people to understand that real estate does have times in which it depreciates. It does not always appreciate. Traditionally, throughout the real estate market, you have seen appreciation, right? We have seen the levels of appreciation throughout the years, traditionally, but there have been some dips in real estate where we see that flattening or we see a softening in prices. And so we're going to do a slight little backstory history. We kind of talked about this before on one of the lives, but hey, let's just dive into it real quick. I'm not going to keep you guys too long today, so you don't have to worry about me chatting too much. I always like to jump on here and see what any questions you guys have in regards to real estate. So right here, we're going to jump through this real quick. We're just going to jump around. If you guys don't know, of course, real estate started in the sense of people buying land, right? They bought land, and that's still what it is. If you really generally look at real estate in the full context, it's about the dirt. It's about the land in which the house is built on, and the land actually holds more value than the structure on the land. And so when a tax assessor comes out, generally they assess the land for more than what the structure is on the land. And typically, if you guys don't know, this might be something you want to talk to your local tax assessor about outside of the appraiser. Typically, the tax assessor will assess the value of the property lesser than what your appraiser might assess it. So let's say if you bought the house for $450 and it was appraised for $450, the comps in the area are supporting $450. However, a tax assessor might come along and say, hey, this house is really only worth $390, as far as when they take the land and the structure on the land. So typically the tax assessor is a little lower than what the appraiser assesses it as, or the comparables in the area throw at. And a lot of people have conversation with this when it comes to talking to people like, well, if the tax assessor is assessing it lower, then why are my taxes X, Y, and Z? And then why is it appraising for X, Y, and Z if the tax assessment is lower? And those are conversations that we're still having to really try to fully understand the ins and outs of why they do such. But I definitely tell people, reach out to your local tax assessor, understand it a little bit fully. All right, so we're going to jump down to here. If you guys don't know a little bit more history, we didn't always have 30-year mortgages. 30-year mortgages came into play after the Great Depression, right? In the 1930s, they started shifting to 30-year mortgages. So it says right here, despite the rise in population and increased development in both urban and suburban areas, U.S. homeownership rates remain mostly stagnant from the late 19th century until after the Great Depression. So they're talking about home ownership. And then it says large banking institutions focus on commercial activities. The federal government played nearly no role in mortgage lending. So as of right now, federal government is playing a role in the whole mortgage part, right? Because now they entered Freddie Mac, Fannie Mae, secondary market. They buy these mortgages that your lender originates, and then they sell them. Some lenders will house some of these mortgages, and then other lenders will actually sell it. So if you guys currently live in a house right now and you went and purchased the house, and within 30 days or 60 days, your mortgage was sold. So you got one person saying, hey, you'll be paying your mortgage here. And then next thing you know, 2 months or 3 months later, it's saying it's been over here. You're going to be paying it this way now. It has sold to the secondary market by then. Typically, the mortgages who have a higher, typically you'll get like the FHAs will be sold, the VAs will be sold very quickly because, and especially with VA, since they're not really putting down payments down, they're not putting that much stake into the game or skin into the game. It kind of frees up more space for these lenders in the front hand to be able to keep originating loans without that debt on their books. And if you want more information about that, again, talk to a lender or a financier or a banker to get more information about how your loans work. But I like to know more about how these different aspects of real estate work, because most people, they focus a lot of their time in regards to the front hand part, where they see the realtor playing the front hand or the lender playing the front hand or an appraiser, all these front hand people, but there's so much going on in the back that you should really get a full context of what's happening on the back end. It says, as a result, the typical mortgage at that time was expensive and had very challenging terms. A maximum loan to value ratio of only 50% versus 80% or more today, a 5 to 10 year maturity versus 30-year maturity. So at the time back in the day, loans were only coming 5 to 10 year maturity. So this kind of corresponds a little bit about how Canada kind of does their loans and different other countries, right? America is the only country, or United States of America is the only country that gives you a 30-year loan term now. And if you guys don't know, they even have 40-year loan terms. They came into effect in the 1980s. Most people think it's a new thing now, but it actually came into effect in the 1980s. And traditionally, those 40-year loans are more on the back end when people go to try to refinance and they do a loan modification. They can then be able to possibly get that 40-year mortgage. And there were conversations about a 50-year mortgage. But if you guys don't know, Japan tried these aspects of 50-year mortgages, 75-year mortgages, 100-year mortgages. It didn't work at the way in which they wanted it to work. And so if that was to shift over to America, I would see challenges in that aspect as well. It says, and little or no amortization. So if you guys don't know, also that's another thing in regards to the loans nowadays, they have an amortization schedule. Borrowers were thus exposed to the real risk of losing their homes if they could not pay off their mortgage or refinance at maturity versus today's full self-amortization. These terms made homeownership unsustainable and inaccessible for broader segments of the population. So back then, again, you buy a house, it would be a 50 to 10 year maturity as far as the loan, and then you would have to either refinance when it came to maturity, try to figure out what those new rates are, whatever rates were in place, and try to be able to sustain your house at a possible different rate when it came to maturity, or if you had the sense to possibly pay it off, or those different things. And say, then we head into the Great Depression, and it says on October 25th, 1929, the U.S. stock market crashed and the global economy entered depression. By 1933, nearly 1 in 4 Americans were unemployed. And as we know that whole story, it says the United States sought to arrest the collapse of housing financial institutions, spur employment through home building, and assist homeowners facing foreclosure. To accomplish these goals, the United States passed the Federal Home Loan Bank Act of 1932, which created the Federal Home Loan Bank Board and 12 regional banks to provide funding and liquidity support to housing finance institutions. 1 year later, the Homeowners Loan Act created the Homeowners Loan Corporation, HOLC, which was intended to facilitate the refinancing of mortgages and curb foreclosures. So when the Great Depression happened, it sent a lot of homeowners into foreclosure because, of course, the loss of jobs. They weren't able to support, the loan, the monthly payments on the loans, and a lot of people lost their jobs. Hey, what's going on, David? What's going on? Happy Sunday. We are just learning a little bit about understanding real estate and the history behind real estate. Some people, might know about it. Some people might not. So figure why not do a quick little history and just have conversation about understanding real estate, understanding what's happening in the housing market right now, and then understanding agents in which you choose to help you with your real estate journey. Right here, so it says the HOLC introduced long-term fixed rate mortgages that self-amortized over 20 years, later expanded to 30 years. So they then went into 20-year, as they said here, and then they went into 30-year. Again, the United States of America is the only country that does the 30-year term. In 1934, the National Housing Act established the Federal Housing Administration, which is FHA. That's what it stands for. And this was established. It ensured these restructured home loans and further expanded to the use of fixed rate long-term mortgages. The HOLC stopped issuing mortgages in 1936, and 2 years later, the Federal National Mortgage Association, Fannie Mae, was launched to foster a secondary market for FHA mortgages. By the beginning of World War II, these crisis response measures had created both a standard mortgage product and a financial system that could support mass homeownership. So again, Fannie Mae is a secondary market. And what they do, again, is that when a lender originates the loans, they then in turn sell those loans off to the secondary market, which is either Fannie Mae, Freddie Mac, and those institutions turn around and they bundle up a package of these loans and they sell it to investors as mortgage-backed securities. And that's how it goes about freeing up space for that lender at the front end to actually be able to originate more loans. Hey, Lang, what's going on? Just learning a little bit about real estate history real quick. All right. So if you guys I feel like most people, again, they see the realtor because we have so many face-fronting reality shows. We have so many face-fronting social media platforms, whether it be Instagram, YouTube. So you'll see a lot of face-fronting real estate agents per se, and how real estate works, opening doors up, touring houses. But I always tell people the biggest thing about real estate, and I tell my dad about this all the time when we talk on the phone. I know every day I'm talking real estate, so I know he's probably sick of me. But the biggest thing I would say is that you got to understand the contracts and you got to understand the math and the numbers. Real estate is numbers and understanding what you're signing and you're agreeing to. And so the purpose of talking about this loan product on the loan part of it is because that's the math part, right? And most people don't know. When I get people that come to me, they'll say, I don't know the questions to ask the lender, right? This is just history about the finance part of it, the loan part of it. But hopefully through this history or understanding, you will be able to get some questions that might spark in your head to be able to jot down to ask your lender, right? Because most people don't really know where to start, especially if they're first-time homeowners, or even if you're a second-time homeowner that hasn't bought a house for 10, 20 years, right? It's a different market. It's a different time. So you don't remember what you did those many years ago. All right. And so then we go down. So that's when FHA came into place. And then this is talking about the GI Bill, all those different things. And then it gets down to, let me see right here. Let me see. It says, this is talking about the post-war. It says, these changes, financial products and systems combined with Americans' post-war prosperity result in fundamental transformation in American housing tendency. Although the shifts in housing tenure, differed across population groups, whereas prosperity and GDP growth in the 1920s had corresponded only with an increase of 2 to 3 percentage points in the homeownership rate. The homeownership rate increased nearly 20% points between 1940 and 1960s. And so that kind of talks about that. And let me see. It was another thing that I thought might be interesting with you guys in regards to even the simple fact of how housing was more single family. And now we kind of have these condos, townhouse structures. It says right here, before the end of World War II, nearly all homes purchased in the United States were detached single family structure. Although single family homes remain by far the most common form of tenure, advances in technology and financing have opened up new tenure opportunities for American households. One such tenure type is ownership of a unit in multifamily building, commonly referred to as a condominium or a condo. The nation's first modern condos were built in Puerto Rico in 1958, and the ownership model quickly spread it to the contentious United States in the following years. Section 234 of the Housing Act of 1961 allowed the FHA to insure mortgages on condos, and by 1969, every U.S. state had passed laws allowing condo ownership. And so this is big now in regards to condos, because what we're seeing right now, due to what happened in Florida with the seaside crash with the condo building falling down a few years ago, now in order for these condos to be insured, you have to make sure they have a master policy in place. You have to make sure that these condos fill out, like the HOAs have to fill out these questionnaires now. Well, I don't know about you guys, but in Georgia, that's what they're making us do. And so it's almost interesting to see how history repeats itself, where it was saying at one point they didn't want to insure these condos, and now, then it passed as far as insuring home ownership. And now we're kind of cycling back where, because of that collapse, we're seeing that they'll insure them, but you have to go through these steps in order to get them done, like the condo questionnaires, the master insurance policy, all these things. And also always look into, especially if you're buying a condo, ask about any special assessments and different things happening. It says condos increase in popularity as the parents of the baby boomers aged and retired in 1970s and 1980s. So as you guys know, typically condos are one level. So you are getting those, so those baby boomers moving into these condo facilities because it's a flat floor, everything's on one floor. You get the elevators to go up and down. You don't have to take care of the grass. You have all these amenities. However, as we all know, HOAs have now risen as far as inflation goes. And so then we head from there, and they talk about here the mobile home construction. So I don't want to get everything into that, but needless to say, we'll end here. It says, conclusion: following record high homeownership rates before the 2008 housing financial crisis, homeownership rates have remained relatively static at the current rate of 65%. Condos, manufactured homes, and other novel forms of tenure may present prospective home buyers and policymakers with the means to overcome barriers to homeownership and allow more households to own a home. And so, as you guys also know, we did face in 2007 through 2008, we faced that great financial crisis in regards to the housing market due to the subprime loans. And with that happening at the time of us seeing the housing going up, as far as the price points going up, we did see a shift in the softening of home prices going down due to that great financial crisis in 2007, 2008. And I was trying to bring up this information on the Federal Reserve map, but for some reason it's freezing. Needless to say, now let's talk about understanding if you're currently in the housing market, if you're currently working with real estate agents. And I want to talk about this because I'm seeing this happen in the metropolitan area of Atlanta. Excuse me. If you are currently an agent and you are currently someone that's looking to sell, be very mindful when you sit down with the realtor. And if you're saying, hey, I believe my house is valued at such, because everybody has a value in which they feel their house is at. However, around you see things selling for less, or you see a depreciation in things happening around you, but you have their similar specs as far as 2-bedroom houses, 1 bathroom, similar floors, similar square footage, similar year built, and they're selling, let's say they're selling for $300,000 and you want to sell your house for $400,000. If a realtor comes in and they say, okay, you can sell your house for $400,000, even though they know that the market is not bearing $400,000, I would definitely think twice as far as that realtor. So some realtors are trained through their brokers. Even if they know they can't sell the house, they like to go out and tell a person that they can, instead of being honest and saying, hey, this is what the market is bearing. This is what the comps are saying. This is what has closed. This is what's active on the market. This is what's under contract. Instead of them pulling out that data, or even if they do pull out the data, right? and they still appease you as a seller, which is great because we want to make sure we understand where you guys are coming from as sellers as well, trying to sell your house. At the end of the day, we have to choose to step back or go forward. If a realtor chooses to go forward, knowing that the market doesn't bear that, to me, that's not a realtor I would personally work with, but you have your choice to do what you want to do, because that what they'll traditionally do, and what realtors are taught to do, not all of them, is that they'll take it and say, okay, we're going to put it on the market for what you say, but we know that it bears this. And then they'll eventually say, hey, no one's coming, so we need to bring the price down. No one's coming, so we need to bring price down, knowing that the price should have already been down and you're up here. So as we traditionally say, you're chasing the market, and then over time, it might be hard to get the price at any price point per se. It might be lower than what's already on the current market. And this spared this conversation because of this particular neighborhood that I had a client in. And I don't know if you guys can see, I'm gonna make it right here. So I was like, okay, what is going on with these realtors? So this house right here just came on the market for $429. It says A for active, if you guys can see that. All right. Everything else active, 365 active. This is pending at 350. All the same stuff, 3-bedroom. This right here is, yeah, I'm like 3-bedroom, 3-bath, half. Okay. This right here, 359, 4-bedroom, 2-bath, 2-half. So my thing is that if this is at 359, 900, same community, 4-bedroom, 2-bath, two full bath, 2 half bath. This is, I don't know how they got a 331, because when I looked at it, I believe from me looking at it, this is similar to this one here, and this is a 321. So I don't know if the agent put the wrong number in there, because sometimes agents will put misinformation in there, though they're rushing so fast they're putting wrong information. I've called several agents and let them know that that's not correct. And they're like, oh, Lord, my transaction coordinator put it in there, or my blah, blah, blah did it in there. It's a lot of excuses for you just, putting the wrong information in. Just say, oh, I'm sorry, I put the wrong information in. But anyway, the only thing that closed in here closed in 2020, October 2025 for 405. So that's the highest close, 3-bedroom, 3-1. So if this is similar to 3-bedroom, 3-1, and this was 405, how is this going to appraise for 429? This closed, this was a rental, so we don't count rentals because rentals can't count as far as purchasing. Then you have another one in here that's listed for 365. This closed for 370. And this is similar. It says a 331. So if it is a 331, this closed August 2025. And yes, I am going back to 2025 because we're in 2026. And if I was an appraiser, which I'm not, they traditionally, again, they look inside of the subdivision, then they pull back out of the subdivision if they can't find no comparable sales that happened within the last 6 months last 3 months, 6 months, and sometimes to a year. I've talked to an appraiser recently, and they said because there's a lot of stagnant happening as far as people being stuck in their homes, they cannot move. It's hard to actually discover the real data of where the price lies at as far as what the home could be worth. So now they're going back. They even have to go back a year now to get that data. And if that is the case in this situation, how would this property for 429 appraise? And so when I went in the back end for this property, because I always like to go into the back end to understand why people are pricing properties as such, what I'm realizing, and if you guys, you let me know in the comments, whether you're live or on the replay, if you feel like you're trapped in your home, let me know, have you decided to go and pull money out, refinance, right? So in this situation for the 429, and they probably priced it there because it looked on the back end that the person pulled out $75,000 as far as refinancing. And so now you have an additional $75,000 that you pulled out as a second. You have your first, and now you're trying to get out the house at 429. Again, I don't know the background as far as what's happening with this person. They might have possibly lost their job, so they had to pull out that money to try to sustain themselves while they're trying to sell their house. But again, I don't think that's the best way to do it, because eventually, I could be wrong in this situation, but I see them going into foreclosure. Just because if you don't have a job, if you can't come across a job in a certain period of time, you pull stuff out, you can't afford to keep paying, the money's dwindling out, is, to me, in my mind, is leading towards foreclosure. So if you have a realtor that comes into you guys as an agent and you are trying to get out your house and you know that you have a second mortgage, you know that you're trying to sell your house for overvalue in a market that's depreciating depending on where you're at. Again, every market is different. Up in the north, some people are able to still get a price for their house that's more expensive than last year. But down here and where I'm at in the south, and this particular Sunbelt market, we're seeing the depreciation value in certain homes in certain areas. So people are not able to jump out without understanding how to do it correctly. And if an agent comes along and says, I can get you out of your house, that's listed here, even if you have a price point, even if it's unrealistic price point, that agent has to sit you down and tell you, hey, I don't see you moving. So I'll give you a story too. So today I went to a listing presentation in regards to someone that wanted to sell their house. And this has been happening a lot with me. And I have, unfortunately, have to tell the sellers the truth, the transparency of what's happening in the data, the surrounding comps, the information. And this is probably maybe the fifth home seller I've talked to that I haven't been able to work with them because I'm being honest and I'm saying, hey, I don't see you getting out of this house right now. You're underwater. This particular person, they bought this house in 2022. It was a new construction. They paid a certain amount for the house at the time. And now they owe more on the loan than what the house is worth. Around them, houses are selling for about 10 to 15,000 less and then what they owe on their mortgage. And so now you're stuck in the home. So there's different ways in which people are stuck in the home. And this is when you have to have these conversations with sellers and also buyers in the sense of buying as well. But on the seller end, let's focus on seller end right now. You have to say, as an agent, it's not always great to just take a deal to take a deal. Some agents will take a deal because they want to say like, oh, I have so many listings. I have 30 listings. I have 50 listings. And you'll hear other agents say, you want to work with agents that do so much business, that has all these listings and this. And no, some agents just take listings. They have a bunch of listings and then go to you and say, hey, I can sell your house because I have 50 listings on the market. But yet none of these listings are selling. I see it all the time. These agents have massive amount of listings and they're just, it's a number game to them. They're like, which one sells first? And, I get my check. So you have to make sure you're vetting your agent outside of just saying like, oh, they have a bunch of listings, And so outside of that, on the seller side, you also want to make sure your agent understands, again, the finance part. You want to make sure they understand how much you owe in your mortgage. If you have a second mortgage, if you decided to do down payment assistance down here in the metropolitan area of Atlanta, if you guys heard them talk about a Georgia Dream program, different down payment assistance programs, every down payment assistance program, some way, somehow, is they're going to get you somewhere, right? Georgia Dream right now, before back in the day, used to be forgiven when you got out of the home for the down payment, but now it's not forgivable no more. So if you decide, and I had another client that I was looking at, they own a house in the south side of Atlanta, used Georgia Dream for down payment. And now they trying to sell their house too. They lost their job, unfortunately. And with that being the case, they're like, I need to get out of this house before I possibly foreclose. They bought 2022 again, higher than what the neighborhood's worth now. Has Georgia Dream down payment assistance program. If they sell, they got to pay that down payment back of $12,500. The house was bought at $261. The neighborhood is now sparing that. Comps are selling for $239, and then you also owe $12,500 in down payment assistance back to the program. You also going to have those fees when you use a realtor, and even if you decide to sell it for yourself for sell by owner, which you can also do as a seller, and as a buyer, you can buy stuff yourself. You can sell stuff yourself if it's for yourself. You don't have to have a license to do so in real estate. But even if they were to sell for sell by owner, they still would have to pay back that down payment assistance program, that $12,500. So we have to be very cautious as home sellers, as home buyers going into home ownership, understanding the programs, talking to the agent to fully see if they understand the programs that you either have or that you're trying to get. There are several down payment assistance programs, so every agent probably won't know every program. I don't know every program, to be honest. I know certain programs, I don't know every program, but I am going to tell you that every program in some way, somehow, it's not free. There is a get you gotcha to a program, whether you're paying it back when you have to move, whether if you want that lower interest rate, you might be paying points up front, whether if it's a possible grant, it might be forgivable in 5 years, so you can't move. And if you move, it's no longer a silent second. It becomes a piece that you might have to pay off. So there's different things. So you got to understand is sometimes you might get a grant or per se, and it might say, okay, here's $20,000 for down payment assistance and closing costs, but it might move your mortgage rate up higher. It might go from a 5% to a 7%. You just have to fully understand those factors when it comes to that. So when you're talking to agents, make sure they fully understand these factors, right? Because as a home buyer, as a home seller, you guys need to make sure you're putting yourself in a good predicament to be able to win and be successful at the end of the day. Again, as I stated earlier, real estate does not always appreciate. So if an agent comes to you and say, hey, buy the house now, because this is what happened to a lot of people who bought in 2022, 2023. The agents they were with say, oh, that's okay. Go out and buy this house, because you know why? Real estate always appreciates, and you're going to definitely be able to sell this in the next 5 years and get your money back. I had the situation happen with another client that I was trying to help, that they came to me. They bought in 2021. They bought at $889,000. Thought the house was possibly worth $1 million. I had to let them know it's depreciating in this particular area. It's not worth that, right? So you got to be very cautious. You got to make sure you fully understand, and make sure the realtor you're utilizing or the agent per se you're utilizing understands real estate. They're being honest with you. And I tell my clients this as well. Real estate does not always appreciate. It is cycles in the market. And when it depreciates, does it go up? Is it higher from the yesteryears? Of course, right? We've seen it go from the 1930s all the way to now. If you look at the charts, it keeps climbing up. But there were moments in space in which it depreciated, and there were times in which people, when they were selling real estate, they might have bought it for $150 and sold it for $120. So there was a depreciation there, right? So we just got to be very honest. We got to understand real estate. You got to understand the agent that you're working with. You got to make sure the agent understands real estate, because a lot of agents nowadays as well, they're able, and it's okay. And I tell people, if it makes sense to do so, it's okay to get a real estate license to understand real estate. So a lot of agents do grab their license to understand, for purposes of just having a license, and they're not truly active in the market. When you sit down with a real estate agent, if the conversation should be like, okay, what is the market? So what's the market currently looking like? Where are the rates at currently right now? What do you feel like, this current economy might spew in regards to housing going forward? And of course, those are very, well, the last question I should say more of a crystal ball question, right? Because we don't know if the market's going to go up or down. It all depends on your area. It's very local, but you should be able to have some type of conversation of understanding the cycling of real estate. You should, and I know some agents like to do this. I'm not that type of agent. If some agents don't like to answer finance questions, don't like to talk about numbers. I feel like as an agent, you should know a little bit about numbers. I'm not saying that you're the lender. And so if they start getting into the space of trying to understand more of that loan context, then you can be like, I can tell you but so much, but then you need to go have a full conversation with a lender. Sorry, my face keeps going out because I got this green screen on, so it looks wonky. Am I saying wonky? So you should, but if you come to an agent and say, hey, what are the mortgage rates looking like? And they're like, oh, I don't know. You should go talk to a lender. To me, that's a red flag. I feel like if your business is being a real estate agent, you should understand those small details of real estate. You should understand where mortgage rates are at currently. You should understand possibly what are you seeing loan wise. Like, do you see like what's happening? Like right now, I can tell you in Metro Atlanta area, we're seeing what I'm seeing in the FMLS from just looking at the data. I'm seeing cash buyers. I'm seeing conventional loans. Those are like at the top. In this one particular building where the seller was trying to sell at, most of the purchases in there were cash or conventional. So what I did is I did a chart for them as a seller, and I said, hey, I just want to make you aware, even though this is opened up to all these other loan options, FHA, VA, conventional, and then cash, which is not a loan. USDA, you can't buy it because it's not rural. But this is what I'm seeing. I'm seeing more conventional people buy it, more cash people buy it. And one of the reasons why is because you have a high HOA. So most times the FHA buyers, the VA buyers might not be able to support these higher payments on the HOA when you're seeing an HOA of $1,000 something a month. So you're seeing these people buy these properties in cash because they're like, okay, if I fully pay off this mortgage, then technically they're looking at their HOA as a quote unquote mortgage and not combining it with that mortgage that comes from that loan. So understanding that, understanding your neighborhood, understanding the terms in which people are closing at. I feel like if the realtor cannot lay down these things, you might be like, okay, let me move on to another realtor that's fully engaged in real estate. Because again, just because you have a license does not mean you're fully engaged in real estate. You don't need to know the history of real estate. Like I like to know, the history. I like to understand why stuff started, why things move this way, just because I want to get a full context of the business I'm in. And that's just the person I am. So I'm just being extra, I guess. I want to understand, why we had 30-year, loans and why other countries don't have it, and what type of loans do we have available and what type of options are here. So it's just me getting more context about, the business that I'm in. However, as when you guys are working with a realtor, whether they're selling your house or helping you buy a house, they should have some type of knowledge as far as real estate. On the buyer side, if you're walking into a home and the realtor shows you, and you look up at the ceiling and you see brown stains in the ceiling, any type of funny discoloration in the ceiling, and the realtor just tells you, oh, don't worry about it, you can just paint over that, it'll be all right. No. That's another sign that you might want to go and talk to another realtor, because those things might signify water damage, some type of moisture seeping in the house somewhere, right? We don't know if that seller effectively got that treated, if they cut that drywall open, if they replaced that possible wood that might have some type of wood rot inside of it or something. So you got to be very mindful, especially inside the house. You need to make sure if the HVAC is above wherever that at, if the bathroom's above that ceiling where you see that stain at, you need to make sure there's no more leakage coming, through that, whether it be a coil from the HVAC or some type of pipeline or something broke. We just want to make sure there's not extra moisture seeping in somewhere, right? If you go into a house as well and you see like the floor slanting, or you see some type of crack like going through the whole ceiling or something, that might signify possible foundation issues. On the side of the doors, typically you'll see on some side of the doors, you'll see a small little crack, which is typical in most homes. It's because the home has settled. But if you see that crack kind of start to extend through the wooden, around the door, the framework of the wooden door, and you see that crack start to kind of come through there, and it kind of widens a little bit more, that could signify also foundation issues. So if an agent said, oh, don't worry about that framing around the door, you can just take a nail and just hammer it back in. No. So it's just small little things you got to be very cautious of, just because, again, we live in a time where real estate has been glorified in the sense of everybody watching these TV shows, being on social media, and I call them sometimes pretending to play real estate instead of actually fully engaging in real estate. And it frustrates me sometimes, I'm gonna be honest, just because I see a lot of this happening. And then people come online and they talk about how bad agents are, or they don't want to work with realtors, and it kind of makes me frustrated, because I'm like, there are some wonderful real estate agents, some great real estate agents. If you guys even watch some online, like Jackie Baker, Jen Sylvester, David Matney, Christina Smallhorn, you have like a plethora of these wonderful real estate agents, and then you have some that are not the best, but I call them, they play real estate. And that's in every field, right? Every industry has their goods, their bads, their in-betweens. So I just tell people, be mindful when it comes to real estate. Be mindful understanding real estate. If you guys have any questions in the comments, let me know. We got 10 more minutes left on here before we kind of head out. So if you have any questions about real estate, if I can answer them, let me know. If you're watching the replay, put questions below. You can also email me, or you can give me a phone call. So if you do call me, be mindful that it will go to my business number. So if I don't answer right away, I will call you back, but definitely leave a message. Excuse me. And I will call you back. Let me put that on screen. So if you have any questions, if you want to understand real estate, I'm not going to force you to do real estate with me. You could be in any state. Every state is different as far as their state law, state restrictions, different things, codes, permits, everything like that. So I probably won't be able to answer those deep questions like that. But traditional real estate questions across the board, like about if you don't understand earnest money deposit, if you don't understand due diligence period times, if you don't understand the concept of on a smaller level is financing the different loan types. If you just recently, because what I'm getting now, I'm getting a lot of more people who recently purchased that might want to sell, and they're stuck in their house because they bought a new construction per se. Let's just say they bought a new construction. The new construction gave them a low interest rate. They gave them these wonderful incentives to buy the house with. They got closing costs. They bought the house higher. The new construction said, hey, we're going to give you a 2.99, a 3.99, a 1.99. We'll give you a fixed rate. We'll give you a 2-1 buy down, a 3-1 buy down. And everybody's like, oh, yes, I can get in here because everybody's looking at the payment as far as how much they could pay monthly. And now 3 years later, 2 years, 4 years later, they're like, oh, I got to get out of here. My mortgage has increased drastically. Things have changed financially for me, possibly. I don't know if I froze y'all. Let me know. Things have changed financially for me. The mortgage has increased because the property taxes have gone up. The home insurance costs have gone up. And because of that, they're trying to escape now. And now they're finding it hard for them. They're stuck because depending on where you're at, again, I'm basing this off of the Sunbelt states, depreciation is happening. You're getting these builders also turning around and they're building out subdivisions because a lot of these builders bought this land. It took them several years for them to go through the permits, pulling the permits, the coding, the zoning, all this stuff. And now they're finally building out these other homes. And because the market is turning the way it's turning, these other homes are costing a little bit less. They're still giving them, better interest rates per se, or mortgage rates, I should say. Stop saying interest rates. Giving them better mortgage rates. And now that person that's coming to buy your house that you might have bought new construction 2 or 3 years ago, they're like, hey, I can't afford this house now at the cost that you're trying to get me to pay for it. And then also the rate that we currently are sitting in right now. So we're seeing a lot of different things happen, a lot of different factors happening. Like I say, you want to just make sure the realtor that you're working with, the agent you're working with, fully understands real estate, fully understands what they're doing, can have a great conversation around real estate. Like today, again, when I sat down with the client, first thing off the bat said, how's real estate doing? And I told him, hey, it's slow. That's what I said. It's slow. It's stagnant. Prices are depreciating. People are stuck in their homes. And we just had a good conversation. Told him about, like I always like to tell people, we started talking about the mortgage rates. We started talking about the real estate industry. We brought up the whole concept of real estate not all having those moments of depreciating. And different things happening. So, it's just interesting. Hey, Kotaxasita, I forgot my evil twin isn't allowed to post here anymore. No, your evil twin can post anytime he wants. I had a realtor here a few years ago. He said he had buyers that would be interested. Is this somebody I want to work with? So I'll tell you another trick that your brokerage will say, because my broker used to say this too. Always tell the person you have a buyer. I don't do that because if I don't have a buyer, I don't want to tell people I have a buyer. Some agents will say that. They'll cold call people and they'll say, hey, if I was to bring you a buyer, or would you be willing to sell your home? Or they'll say, hey, I have buyers interested in your home. Would you be willing to sell it? And then you'll turn around and say, yeah, I'm interested in selling. And then they'll try to go find a buyer. Or they'll say, you know what? The buyers that I had, they backed out. But if you're interested in selling, I definitely can list your house for you. And because I can put you in our MLS and give you that exposure, you can ultimately get more buyers with that exposure. So it's a trick in which realtors play. Of course, every industry, they play different type of tricks per se. But I don't lead with that because if I ain't got a buyer, I ain't got a buyer, because I'm not trying to I don't want to leave a false narrative. I'll call people because I do cold call as well. Most realtors who are successful, typically, unless they have a big network, or they're always networking, or they have a good pipeline, or they, have been generations in real estate where that family already nurtured those people. You have to kind of start with the cold call and the door knocking and all those different things. I door knock, I cold call. I still do those basic things. And when I call people, I just get straight to the point. I'm not going to lie to you about I have a buyer. I'm just saying like, hey, my name is Devon Clark. I'm a local realtor in the area. I just wanted to ask you a quick question if that's okay. And then they'll say, okay, yes or no. Some people say no, and then we'll just hang up the phone. Some people say yes, and I'll just ask them, is there any interest of you possibly wanting to sell your house or, downsize, upsize in the next 3 to 5 years? And some people say no, not thinking about. Some other people say yes. And then sometimes they'll say yes or they'll say no, and we'll just fall into a traditional conversation because we're both human beings at the end of the day. And so, make a friend whether they want to sell or not. He said, I did solicit this agent. Okay, so you was the one soliciting the agent. So you went to the agent and they told you they had buyers. So you were interested in possibly selling your home and you went to the agent, if I'm reading that right. So you solicited them, they didn't come to you. If that's the case, he might have buyers. Because some agents, like I said, some of them use it as a tactic and some of them might have buyers. I know some agents will say, oh, I have a buyer. I think one of them put it today in our system, and they said that they had a buyer looking in this condo building. And if anybody had a condo coming up in that building, the buyer would is interested in being in that building. So sometimes you'll get a person who does have a buyer, but if to say they have several buyers for one particular area or one particular house, I would be very cautious because I don't know. But if they say they have one buyer that has been looking in this area for a long time and they're just waiting for something to pop up and they'd be willing to jump on it, you could possibly get somebody that has such. So you just have to see what the agent is about. Maybe not even list the house. Maybe just say, you know what? Have them throw an open house for you and just see if these buyers come to the open house. I don't know. I don't know. Giving you suggestions. I had a caller a couple weeks ago. Finally, a good snarky reply to my $500,000 price. You count to 500,000, and I'll have a buyer for $500,000 for you. Click. Oh, hey, that's funny. It says that you count to 500,000, and I'll have a $500,000 buyer for you. That's so funny. So, but you never know. You never know. I just tell people just make sure. Any agent that you're talking to or you're working with, just make sure they that you fully vet them in regards to, ask questions that are meaningful to yourself. Ask questions to make sure you understand. Ask questions to make sure they understand what they're doing outside of just trying to get the business. Okay. Because everybody asked me 1,000,001 questions. So I'm like, they asked me 1,000,001 questions. I'm like, hopefully they ask these other agents 1,000,001 questions. And it's okay to ask questions. I ask questions all the time too. I ask the seller questions. I ask the buyer questions. Like on the buyer side, I'll say, do you feel comfortable? Like, what can you afford mortgage-wise? Are you comfortable with this mortgage payment? I tell them, go to your lender, try to get an estimate, a good faith loan estimate in regards to how much that mortgage might possibly be. I, have conversations. They typically tell us don't get into people's finances, but nowadays we really do need to investigate your finances, right? Especially because I'm in the mindset of like, I don't want to put people in spaces that they can't afford because taxes are still going up, property taxes are going up. And if Georgia officially, I think they're saying that they're officially trying to pass these state tax relieving state taxes, I believe. And if that's the case, that might shift over to property taxes. And if that shifts over to property taxes, we might end up how Texas is. And some states are where the property taxes are higher because they're trying to shift the money somewhere else in order to get that money to, for the infrastructure around, because they're losing it in one area. So they have to make up for another area. So do you want to make sure, am I financially equipped as a home buyer to be able to possibly sustain myself if that is the case and it shifts that way and its property taxes go up? I have questions for the buyers. I have questions for the sellers. Like I said today, once I sat down with the seller, I said, hey, where exactly is your mortgage at? Have you paid off your mortgage? And then they showed me where the mortgage is at. And I was like, yeah, I think you're better off sitting in your house until the market possibly flips. And I just gave them suggestions of what they should do in their house to make it more comfortable for themselves. But that's how we got to go sometimes. We can't always tell a buyer like, hey, somebody trying to buy, hey, let's go out and buy, even though we know financially you're not secure to buy nothing. And you put yourself in a situation going forward where you end up down the line losing said asset instead of being able to keep it because you can't, you know, from the beginning you couldn't financially afford it. And then on the seller side, it's no point of us saying let's sell this house, knowing that we already know the mortgage is such and such. Houses are showing one thing, your mortgage is higher than what the houses are worth. You're putting on the market. It becomes a waste of time for everybody all around, from the sellers to the buyers to the agents. Like I said, some agents go about it that way because they're trying to push for sales. I don't know. That's just not me. So, you know, my sales have been low, you know, recently just because everybody I've been encountering, either as a seller, they can't financially get out the house, and then as a buyer, they can't really financially buy after we sit down and have the conversations. So some of them have been shifting towards renting and everything. But and I just don't want to waste anyone's time. I don't want to waste your time. I want to be courteous of your time, just like I hope you're courteous of my time. And I don't want to put a false narrative in someone's head about real estate when I know the truth sitting in front of us. So I just tell people, just, you know, have those conversations, to be honest. But needless to say, I don't want to keep you guys on here forever. We're close to our hour mark. I just wanted to have this conversation around understanding real estate, give you updates as far as where those rates was at, talk to you about different agents and the type of agents to avoid. So if you see these agents that's coming to you saying that they can do these tricks and these backflips for you guys, and they're not having full transparent conversations and they can't talk real estate, they don't know what the current market looks like in real estate, I would tell you guys to question them a little bit more. And if you feel like they're not the best fit, to move on to someone that makes sense. Of course, you want to make sure that you have a connection with them, that you can feel like you can trust them as well. But you also want to make sure you're doing the making the right decision for yourself as far as when it comes to purchasing or selling real estate, because it's a big asset nowadays that costs a lot of money. But I want to tell Cole Texasita, thanks for joining me tonight. Lang, thank you for joining me. David, I appreciate you jumping on as well. Miss H, I know she said she was sick, so we're wishing you the best as far as your health going forward. And then my dad as well for jumping on. And if you guys are watching this on a replay, don't be scared to comment below. If you're new to the channel, let us know where you're tuning in from. Let us know how you found out about the channel. If you have any questions, need any help, or just want to understand more about real estate to make it make sense for you in the future, or where you're at in your current state, again, you can reach out to me. I'll put my number on here. It don't matter where you're at. Every state is different, so I can only answer basic questions in different states. But if you're in the metropolitan area of Atlanta, you want to get more context around what's happening, I can definitely dive deeper into it with you. So you can reach me at 678-995-3170. That is my business number. So again, if you call me and I don't pick up right away, I will call you back. My phone does screen people, and that's because of the spam callers. So it's not that I'm ignoring you, and it's not that I'm, not trying to talk to you, but my phone does that. But if you email me, I can, and you put your number in there, I can definitely get back to you as well. And if you are in a different state and you want to be referred to someone, another agent local to you, I can do that as well. All right. Lang said, great information as always. Have a great week. Back on Wednesdays. Thank you all for tuning in. Yes, we should be back on Wednesdays. Hopefully, I'm currently working with 2 buyers that are under contract purchasing houses. So yeah, hopefully we'll be back. So that's why I've been kind of MIA, you guys. And then last Sunday was Super Bowl, and I went to a YouTube event in regards to the Super Bowl. He said, you need your own domain. Hey, maybe one day. We'll see what happens. But thank you guys. Have a wonderful night, and I will see you guys hopefully on Wednesday at 6:30 p.m. Eastern time. If not, we definitely will be back on here Sunday, 7 p.m. Eastern time. But we're going to try to aim for Wednesday this week. All right, you guys, take care. Bye-bye.